On today's podcast, I had Tarry Summers on, and Tarry has hundreds of rentals in the Ohio market, and we talk about what it was like for him building that up. He actually took a very different route than I did, where he ended up buying rentals first while living on his friend's couch for $250 a month. He ended up just continuing to live very frugally and eventually got to making over $10,000 a month in positive cash flow. From there, ended up scaling to doing flips and wholesaling, along with other businesses like a gym and other entrepreneurial endeavors. So it's really cool to hear his story, as well as some of the things that we both see in today's current market. He also goes in depth on why he's liquidating a bunch of his rentals. So you want to make sure that you stay tuned for that so you can see why he's doing that and how it might affect you. So with that being said, let's jump into the podcast. Welcome to the Ryan Pineda Show, where our mission is to invest.
I only expect to make money in things that I understand.
Innovate.
It's about believing in the future and thinking that the future will be better than the past.
And inspire. I am much more likely to hit my goal just due to putting it out there.
You now rocking with the best.
What's going on, everybody? Welcome to another episode of the Ryan Pineda Show. Today, I've got somebody from Columbus, Ohio, who's got over 250 single-family units. That is tough to accomplish, dude. I've got none other than Tarry Summers. What's up, man?
What's going on, man? We've actually been selling a lot of stuff off.
Oh, really?
Taking advantage of the market. Yeah.
I don't blame you.
Yeah. Trying to cash in a little bit, you know?
Yeah,
Trying to take some chips off the table.
I'm with you. I've actually kind of been thinking about that recently. Not in terms of my rental properties, but like not flipping so much and starting to wholesale more and other stuff like that.
Yeah, man. It's just, I don't know, man. It's like that time, you know, you work for so long and it's like, you know, you want to see the money in your bank account instead of on your balance sheet.
Exactly.
So, yeah. And then, you know, you get a wife and some kids and,
you got a lot more expenses than before.
Yeah, exactly. Yeah. And then one on the way. So it kind of changes perspective a little bit.
Nice, dude. That's awesome. So, for those who don't know you, man, give everybody a brief rundown.
Hey, so what's going on, guys? Tarry Summers. Not sure what camera I'm speaking to, but
you can just talk to me, dude.
I'll speak to all three of them and you. But Tarry Summers, Columbus, Ohio, born and raised, South End, and actually started in real estate in 2010. And I had a lady who, she was a real estate agent. She's like, yeah, now's the best time to invest in real estate. And I'm like, prices are down. And then I looked at like the price of real estate at the time and I was like, well, this probably makes sense. If something sold for double than, 2-3 years ago, I should probably like buy it right now. I can't go down anymore, right? You can't,
Yeah.
So then, I got addicted to it and I was like, well, I want to rent out properties and you can cash flow, you can make money like 5 times over, like appreciation, debt pay down, that whole thing. And then today, it's been a 10, 11-year journey to owning a bunch of rentals and, flipping properties. I got my team here and we're wholesaling, we're flipping properties. We got a construction company and just trying to vertically integrate the whole real estate thing.
Nice, dude. So, pre-show, we were just chatting a little bit about your operation and a few things that I want to touch on. So one was, when you got started, you were just like rentals from the beginning. You were in that mindset.
Yeah.
And I've always kind of been the opposite. I'm like, hey, guys, who cares about rentals in the beginning? Like, figure out how to make some money first, and then you could buy rentals later on. Like, why did you go the other way? Because, when you do that, you're obviously, like, living very poor.
Very poor. Extremely poor.
Yeah.
I think for me, man, like, I think it was my first mentor. My very first mentor, his name was Mark. Dude owned 34 rental properties. He rode around this pickup truck, just trying to find things to do, but, had a great family, great wife, great life, and, could do whatever he wanted to, buy whatever he wanted to. And I was like, well, if I can just hang on for like 15, 20, 25 years, and I always thought more long-term, man, than just right now.
Right.
And I was like, well, I can live broke. I don't need to go buy bottles at the club. Like, I mean, I don't need a, $20,000 watch.
That's a Rolex, though.
Yeah, this is my first one, actually.
Oh, nice.
First one.
Looks good. It's, I think we got the same one. What is it, Submariner?
Yeah, man.
Yeah. Looks good.
Yeah. But, at the time, I was like, dude, I can live on my buddy's couch and just buy a bunch of houses, and I'm cool with that. I don't need to.
So is that what you were actually doing? You were living on your buddy's couch?
I lived on my buddy's couch and bought 5 houses. Was
he renting his house, or did
he
own
was
it?
renting out his couch for $250 a month while I was making $100,000 at a sales job. Now, granted, the sales job I was working at was like 14, 16 hours a day, So I was only there from like 11 o'clock at night and I always left at like 5 or 6 in the morning.
Right. You were just sleeping.
Yeah, I was just sleeping on his couch. But I'm like, dude, $250 a month. I can, if I'm on his couch for the next 8 months and I can buy 5 houses that cash flow $400 a month, that's $2,000.
Right.
Like, that's pretty sweet, right? And if I can repeat that again and again and again,
Yeah.
dude, I can retire with $10,000 a month. Like, that's the magic number, $10,000 a month. And I was like, dude, if I can just keep doing this, I mean, shit, that's
a lot of dough.
It's a lot of dough for, 25, 26-year-old kid.
Yeah. Okay, so you actually did have an active income job. So that's what allowed you to start.
The W-2 for sure.
Yeah, because for me, when I'm like, I don't make money, period. So I can't even get a loan. So
yeah.
I'm gonna have to flip houses. I don't have a choice. Like that was my active income. But that's a cool story. So you're working a sales job. What were you doing?
Dude, I was teaching people how to sell personal training. So you're literally like walking up to like Mrs. Jones on a treadmill and saying, hey, you're working out with me right now. Let's go. Boom, boom, boom.
Yeah.
Pull her off the treadmill, pull her earphones out, start working her out, sell her a 12-month training program, and then you make $300-400 during that hour.
Wow.
That was, it's just straight hustle, right?
It sounds like
very high pressure sales for sure.
Yeah.
But, if you can teach people how to do that and they're like, oh, I make $300 an hour.
Yeah.
Especially, 22, 24-year-old kids, like, man, I'm getting addicted to this.
Well, I mean, it's like my buddy Alex Hormozy, he just sold Gym Launch for a lot of money, tens of millions of dollars. And I had the pleasure of talking to his now CEO about their sales process. And I mean, like their company is still just selling gyms, how to make gyms more profitable and add personal training and all that stuff too. So a lot of money in the fitness industry.
There's a lot of, and it's always changing. It's always evolving. Like I own a gym now, and like even from the time I've been an owner for the last 6 years, even the last 6 years, like the fitness industry has changed over like 3 times.
What works now?
What works now is not going to work tomorrow. Like Instagram works now. Like if you have a very Instagrammable gym, like the number one fitness facility in Columbus, Ohio, is in the middle of downtown. Got a lot of young people. It's almost like bars,
right?
Like bars and restaurants. If you have a lot of like very good-looking people that go in, people that don't look like me, like people that are better looking, dude, you're gonna have a successful gym. And people that put it on social media the same way you do with anything else, like you're gonna have a successful restaurant or a successful gym.
Right.
So I think that's the new thing because people want to go. Like gyms are almost like the new like going out. So if you can go out to where other people are going out and hanging out,
yeah,
right, it's almost like a social thing now.
It for sure is.
So,
yeah, it's funny, dude. Speaking of gyms, so the last, I don't know, however many years, I've been working out at like an athlete gym where a lot of NFL guys go and, college athletes go and stuff. Because that's how I grew up. I was playing baseball. I always would do athletic workouts. We do sprints. We do freaking jumps. And, we lift heavy and bench press and cleans and all this stuff. Not CrossFit. I've never done CrossFit, and I have no desire to ever do CrossFit. I don't want to be in a cult. So, I don't really.
Dude, I'm with you.
Guys, if you want me to be in the cult, tough luck. So I recently took up golf, and so now I'm like all about golf, and I'm just trying to be really good. And so what I did was I quit going to that gym so that I could go work out at the country club. So I now work out at the country club at like, I don't know, 6:45 in the morning, and then I go hit balls for an hour after because it's just right there.
Yeah, just kind of.
Yeah, and so I'm like, it's weird because now I'm not in this sports gym. I'm literally in this gym with all these old people that are like, just walking on the treadmill. They're not even lifting weights. And I'm over here like crushing it out at the country club.
You're like, man, well, maybe I can be like them one day,
Yeah. But guess what? Those people are better to network with anyway.
They are way better. I have, I think, 5 gym memberships. I have the Athletic Club and LA Fitness, Snap, because it's right by my house, literally like not even a quarter mile. My own gym, and then, like a community membership. So it's like, but you go to different places. It's kind of like going out to different restaurants or something. You just.
I don't know though, dude. If I owned a gym, I think I'd have to be pretty loyal to the gym I own.
I'm loyal, but at the same time, like if I go and wear my brand at another gym or somewhere else, they're like, oh, what's that?
You're recruiting while you're there.
I'm not actively recruiting. It's just branding, man.
It's just subliminal recruiting.
Subliminal.
I get it. I'm on to it now.
Yeah.
So, okay, you got a gym, you do all this stuff, and you're buying rentals. Like, how does it progress to owning so many?
Dude, I think, at least for me, it was, like 10 grand a month. That was the number. And that's like what every guru teaches you when you first get into this, like 10 grand a month. And then once I got there, I started buying some storage units and started I bought a brewery. I opened up a brewery actually. Started doing all this dumb stuff, lost a bunch of money.
Yeah.
And then I realized, well, here's where I was making money was buying rental properties.
Right.
I figured out how to, the properties I was buying and the areas I was buying them in. I had a great model, and it's actually the hedge fund model today.
Right.
And I was doing this in 2013, 14, 15. And I'm like, dude, well, don't quit what made you successful. And it's just, then I'm like, okay, well, if I have 34 of them when I leave my job, in order for me to build a team and have scale, I've got to get to 100. I got to get to 150. I got to get to 200.
Isn't that funny that just once you hit your goals, you're like, man, I don't really feel anything. What's next?
You don't feel any different.
No,
you don't. And you're like, oh, well, I guess I don't have to worry about money, but I mean, you still do. I mean, things come up. I mean, you're always worried about
you also increase your quality of life, and now you're like, yeah, 10,000's not going to cut anymore.
Yeah, no, that's not going to do anything. But yeah, I've always been a much delayed gratification, long-term thinker, legacy. Those words have always been a part of my vocabulary, not need money in my bank account.
Yeah.
I don't, man. This, you said this was your first Lambo. You bought it, a year ago or something like that?
I bought a Porsche last year, yeah.
Last year. So I bought my very first high-end vehicle.
What'd you
last
get?
year? I got a Jeep, but it was one of those Southern Florida Jeeps with
How much did this Jeep cost?
What was it, 84?
Okay.
Yeah. So
I mean, it's kind of high end.
Yeah, but for me, right, in Columbus, Ohio,
they're this guy, he owns the town.
Yeah.
He's got $84,000 Jeep.
Yeah, for sure, man. But then, I bought a Mustang. I'm not an exotic car guy. I'm a classic car guy.
Yeah.
So then I bought a fastback Mustang. I bought a Grand National. I started buying things that I wanted.
Right.
And the more I've gotten into this, it's dude, start getting the guru space. You got to buy a Lambo. You got to buy a Porsche. You got to fit in.
Right.
And we talked about this off camera, but both of us want to be different. We want to be uniquely us.
Yep.
And just being you, man. I'm a classic car guy. Some people are going to resonate with that. Some people aren't. And I don't really care because that's just what I like.
Well, you want in any kind of business and, whether you're coaching or whether you're building a house flipping business, right? You want the right type of people around you. So, you attract who you attract based on what you do. And so for me, early on, I never bought nice cars or watches. I literally last year was the first of many things I did. I bought my first watch too. I bought my first exotic car. I bought my first, who even knows? I'm buying a lot of stuff lately. But I never did that up to this point. I was very frugal. I did not want to spend it. But now it's kind of gotten to the point where I don't see it affecting my ability to do business anymore. And also, too, with content and social media, I do now see where, dude, if I buy this, it actually kind of might make me money.
Yeah, it does. Right.
Yeah.
And once you get that platform, it does kind of make you money.
If you're listening to this podcast, then my guess is you're interested in real estate investing. Some of you are just starting out, while others are trying to scale their business to the next level. But the problem is, with so much information out there, most people don't know which program or coach to trust. Well, I'm a bit biased, but I believe my company, Future Flipper, can help you get to the next level. We've coached thousands of students from all over the world on how to build their real estate investing business. It doesn't matter whether you want to flip, wholesale, or buy rentals. Our coaching program has everything you need to become a great investor. There are many things that we include with coaching, but to give you a few examples, you're going to get an accountability coach. These are people that have had success in their own business, and they want to make sure that you achieve success in yours. We also have all of our documents, our systems, and processes that I've used to buy hundreds of homes. You can copy and paste them directly into your own business. And we have events where you get to meet me, top-level guest speakers, and other students who are crushing it. My students do deals with each other, and I personally do deals with them too. In fact, at a recent event, I just honored over 20 people in our program that made over $1 million in the last year. So if you want to grow your real estate business, head over to futureflipper.com and apply for a call with our team. The call is completely free, and they can help point you in the right direction whether you work with us or not. So go to futureflipper.com and book your call today. For the last year, the real estate market has been on absolute fire. Prices are at all-time highs, interest rates are at all-time lows, and there is more money in the economy than ever. But with so much competition, many investors are sitting on cash, struggling to find great deals. If this sounds like you, then you need to invest with Pineda Capital. With my network and social media following, we get access to the best real estate deals all over the country. And if you're an accredited investor, you can invest with me on those deals. In fact, last year we purchased a 334-unit apartment complex in Georgia for almost $20 million. We expect it to be worth well over $30 million when it's all said and done. Our goal with each deal is to build in so much equity from the beginning that we're able to refinance our investors' cash out and own the properties together with little to no money into the deal. And the best part is, you don't have to do anything. Our team will find the deals, handle the renovations, get them leased, and eventually refinanced or sold. All you have to do is provide the capital. So if you want exclusive access to our deals before they hit the public, go to PinedaCapital.com to schedule a call. We can put your money to work today to start getting you great returns. So go to PinedaCapital.com now to get access to our deals.
What was the point where you were like, man, I'm just going to start buying stuff? Like, what was that for you?
Yeah, so I think, like, people don't understand how frugal I was. Like, when I became a millionaire, I was still driving a $10,000 truck. Like, I eventually upgraded and bought
that.
a 2013 Lexus for $20,000. And I was like, I am freaking balling, dude.
Yeah.
Like, this was such a big expense. I can't believe I bought that. But, you know, my wife and I, we would never go out to eat very often. And if we did, it was like no more than $50, right? And then I think around 2020, but at that point I was a multimillionaire, but I was finding like, babe, we kind of got to start like living life a little more. You know, like, let's go eat these places on the strip that we've never eaten because they were just so outrageous. So we started going to nice dinners and spending, you know, $300 for the two of us. And since then we spent over $1,000 for the two of us on a really nice, and I just realized like it's an experience. And the same thing with just vacationing. I'm like, let's get the best suite. Let's fly first class. So all of that probably started in 2020.
Okay.
And then 2021, you know, it just kept going. And now we're just at the point where, yeah, like that's our life now. And we have nice things. We have great experiences. But by no means is it like the point that I guess you and I always preach against, where it's like, you can't afford to do that yet.
Yeah, no. There's levels to this stuff. Like,
Yeah.
you have to learn how to jump your levels.
Yeah.
And you have to understand when it's an expense and when it's a liability, or when it's actually going to make you money.
Yeah.
You know, my buddy Austin, who we were talking about, you know, he one of his big things, he bought a Rolls. And in Columbus, Ohio, you got a Rolls,
You're a drug dealer.
you're a drug dealer. Yeah, and like, it was he lived in this area that was very, we'll call it transitional.
Yeah.
Okay. And, you know, that's one of the reasons that he had to leave. You know, I mean, people see a Rolls in an area where you have rundown houses, but then, you know, $500,000 houses, which in Columbus, that's a lot of money. You know, that's like a big thing. So, yeah, man, you got to jump levels.
Yeah, you got to just know when it makes sense. Were you a guy who's like, have you heard of the FIRE movement? Okay. I forget what FIRE stands for. I wish I had like one of these podcast directors who looks up this stuff while we're saying it. Maybe next podcast. But it's like these people that really try to save money like super aggressively.
Oh, I was that guy.
Yeah.
I was
That's
definitely
why I
that
was
guy.
asking if you're a part of it. But like basically they have their, I forget what they call it. If you're in the comments, let me know below. But like it's like free fire or something. And like it's basically the 10,000 you mentioned. Like that's pretty much every FIRE person's goal. They're like, dude, just 10,000 passive, I'm good.
Yeah. But
Yeah, financial independence, retire early. Like that's their goal.
they're trying to do it by cutting expenses instead of increasing income, which, I mean, we all know you can only cut your expenses to zero.
Yeah,
But still, like, that's what we've been taught our whole lives. I mean,
yeah,
my parents is like clipping coupons and stuff, and, you know, trying to save money on this, save money on that, and it's just what you know.
yeah. Not much. Like in my life, I literally have never budgeted. I've never been like, this is how much I make. Here's what I'm going to spend here. This is what I'm going to, like, I've never done it.
Never?
Never, not once. And even when I was like broke, I'm like, I just kind of had this feel where I'm like, okay, I make whatever, $5,000 a month. I'm not going to spend money. I can't afford it. You
Yeah.
know, like I'm going to live on the bare minimum. And then when I made six figures for the first time, I'm like, okay, we can kind of like maybe eat out once a week now, you know? And then when I made over $1 million in a year, I was like, okay, we can go on vacation now. We can
Yeah.
I was just always so frugal. And now, thankfully we make a lot and I'm just like, it doesn't even matter. Like I could buy whatever I want and I'm not going to notice.
Yeah, it changes, man, for sure. And I mean, I remember, 2010, 2011, I'm living on my buddy's couch, Rob Pascarella in Pittsburgh, Pennsylvania, unfinished basement on this couch. And I remember getting these cheese sticks, and they were the off-brand cheese sticks because I like cheese.
Yep.
And I remember getting like the Diet Right because I didn't want to like spend the extra like 49 cents on like Coke Zero.
Oh yeah.
And like Diet Coke.
Yep.
And like just like stuff like that, it's like that extra 50 cents, but then you do that over the course of a year, every week, like what you spend, over the year. And in my mind, I'm like for instance, I drove a 1995 GMC Sonoma. We called it the Blue Dragon.
Okay.
And this thing, dude, it putted around town, got me from point A to point B, but I didn't have a car payment. And when I did have a car payment, that was $350 a month. And so I'm thinking in my head, $350 a month times 12, well, that's like almost $4,000.
Mm-hmm.
Okay, $4,000 on a $100,000 house, 20% down payment. Dude, that's like a third of the way there.
Yeah.
Just by doing this one thing.
Yeah.
It's going to pay me for the rest of my life.
Right.
So, I don't know. I've always thought that way.
Yeah. And I mean, especially with cars and stuff, my wife and I were the same way. Like, I was telling you, I was driving a $10,000 car. My wife had a 2007 Toyota Camry as of like a few years ago, because she liked it and it was fine. And I bought it all cash back in the day. And like, that was such a huge accomplishment for us, like early in our marriage. And like, it was fine. And then eventually I upgraded her to a super expensive Lexus, $20,000, and it was great. And she drove that for a long time. And then eventually we just kept scaling up. But I guess it's just people may see me now or you now and be like, oh, I got to buy the nice cars and all this stuff. And it's like, nah, until you're making some serious dough, you shouldn't.
Until it doesn't make a dent or make you blink, you shouldn't.
Yeah.
Like don't try to keep up with the internet Joneses or the social media Joneses. Like, go through the process, man. Go through the freaking journey. That's what it's about.
Yeah. Tell me if you agree with this, though. There is one thing I would have changed while I was being frugal. I would have spent more money on experiences than I did. I don't want to say I regret it, but now I see the value of that because before I was so hard-headed of like, oh, dude, like, why do they go on vacation and like do this dumb crap and why do X, Y, Z? And I now realize the value of an experience to me is so much more than buying a car or material thing. Because like I'll buy a watch and like it's cool the first week, and I'm like,
and then after that, like,
I'm like, okay, it was a watch, but like the experiences, I look back on my life at like so many things we've done. I'm like, dude, that was so cool. Like that was so fun. And honestly, the experiences end up leading me to do other things that are really valuable. Like some of my best ideas that I've done in my business while we're on vacation.
We're on vacation when you were,
I was disconnected.
Yeah.
I'm like not worried about anything. I'm like chilling. I'm like, dude, this would be such a good idea. And then boom.
So I know at least for me, the one thing that really that drove me into real estate was an experience like that. I took off from my job. I played hooky.
Yep.
And I got a promotion to actually run a gym and be a sales director at Urban Active. And my bosses were coming in that weekend. And my girlfriend at the time, she was like, hey, we're going to Fort Lauderdale and we're going to go to the Keys. And I'm like, no, we're not, because my boss is coming in. There's no way I can make this happen. She's like, no, you need to make it happen. I was like, okay, all right, cool, let's do it. So flew out on like Thursday night, was there Friday, Saturday, ended up going to Key West, Fort Lauderdale, hung out. But I remember very specifically, bro, I watched the sun rise, go up, because we went snorkeling in the morning. We were done at like 11:30, and the sun was kind of coming up. And then, some margaritas started flowing, hanging out with some different people. Hung out with all these different types of people in Key West. And I remember it was like 4 o'clock, 5 o'clock, and the sun was starting to set. And I'm like, shit, I have never experienced it. I've never watched a day go by.
Yeah. What a cool experience.
That to me was my entrepreneurial epiphany.
Yeah.
And when I came back, ironically, I met my very first mentor, Mark, who was a landlord and owned all these properties. And I'm like, well, if I can be like him, then I can experience this more.
Right.
So I kind of had like that thing, like that Tony Robbins, like you get the pain and the pleasure. I had the pain of like working like a dog, 14, 16-hour days, sleeping on my buddy's couch. But at the same time, like I had this one experience that I held on to. And even to this day, I still hold on to that experience.
And that's my point is like, what's more valuable to you? That
experience,
that experience or the Rolex? The
All
Rolex
day.
is come and
All
go.
day. Yeah.
Yeah. So that's something for me. And for any of you listening who are maybe, in that frugal mindset, which is great, you're on the come up. I would say don't skimp out on experiencing things in life. And even for me, like I look back when I was playing minor league baseball, right? I was making $1,200 a month and, That's it, dude. $1,200 a month. I did that for 8 years. The most I ever made was $1,600 in a month. So I was forced into entrepreneurship by default. I didn't want to. I wanted to just play baseball, dude. I could give a crap about YouTube and freaking flipping houses. I had to do something. And so, I'm not one of these guys who is always passionate about the camera or real estate. Like, honestly, I like real estate. It's blessed me and it's great. But I am really like agnostic towards all industries. I'm just like, hey, whatever I think is like going to make the most money and I think it's a good return on time and it's a good way to make money. Like, to me, that's business. Like,
dude, I don't enjoy seeing paint go up on walls. I don't like, I used to be the guy that went in every single property and I'm like, look at this property. We just bought this one. We just bought this one. And just Instagram and everything. I'm like, dude, why are you the one that's doing all this stuff? Like, I don't even like doing it.
Yeah.
I don't like seeing paint go up or, and I'll get contractors that'll eventually, they'll text me or whatever. And then we have our own contract come. They're like, hey, look at this floor, blah, blah, blah. I'm like, I don't care. Does it make money? Like, have we closed the HUD yet? Like, are we done?
And that
like,
for me,
I don't care.
I enjoy the process. I've realized now that I enjoy the process of creating businesses, creating jobs, creating products that help people. But however that product comes, whether it's a house or whether it's a course or whether it's tax or whether it's an NFT, I don't give a crap what it is. I just enjoy the product creation and the outcome. That's like what makes me happy.
But it's being a leader. It's being it's about the build. It's about community, camaraderie, like having the team.
Exactly.
Just building, man.
Yeah,
that's what gets me excited.
Yeah, and I think also too, I really enjoy that. That's probably why I can't like stay in just one business. I'm like, okay, what are we building next? Because I get bored. But my point with that was for those of you who are listening, who are frugal and building still currently, spend some money on experiences. Don't limit yourself in that aspect. Definitely don't buy the watch and the car and the crazy house yet, but spend some money on the experiences.
Buy the mastermind before you buy the Rolex.
Oh, 100%.
Buy the mastermind before you buy the Rolex, because then your business is gonna explode and allow you to buy the Rolex anyway.
100%. As the world starts to go more digital, you need to be aware of which businesses are going to thrive in the future. One of the obvious ones is e-commerce. In fact, last year, e-commerce sales did over $4 trillion globally, and it's continuing to grow. Now, if you're like most people, you probably don't have time to learn a whole new industry and start a new business. But there is another way. You could partner with us at Lunar Ecom. We have over 300 e-commerce stores that we have created and managed for our clients. And the best part is, it's completely passive on their end. The business model is very simple. You cover the cost of creating and running the store. We handle everything else. We pick the products, we handle fulfillment, returns, and customer satisfaction. After all that, we split profits at the end of the month. This means that when you win, we win. If you want to learn more about how it works, you can watch our case study at lunarecom.com. I believe that the e-commerce space is going to continue to explode as the world goes digital. So make sure you're with the right partner who's going to be ahead of those trends. So go schedule a call with my team today at lunarecom.com if you want to learn about how we can start taking your passive income to the moon. Most people want to get rich at all costs. They make sacrifices with their family, their health, and their faith, all in the pursuit of money without even realizing it. But what if I told you it doesn't have to be that way? What if you could grow your wealth in all areas of life? Well, it's possible, and that's why I created The Wealthy Way. It's a community of people striving to grow together in all areas. And we have multiple tools for you to use that are completely free. You can get access to the Wealthy Way Planner, where you can set goals and hold yourself accountable on a daily basis. We also have our Wealth Builder Academy, which is over 4 hours of content teaching you how to manage your time, create the right goals, and all the biggest secrets I've used to grow my life, not only in my net worth, but in all aspects. Lastly, we have our Discord community where thousands of wealth builders are all over the world encouraging one another and growing together. And once again, all of this is completely free. There are no upsells, there are no hidden catches. For me, this is a passion project and I want to build a community of like-minded people. So if you want to start living the wealthy way today, go to wealthyway.com. There you can get all the free resources like the course, planner, and Discord community. So go to wealthyway.com. So I know for me, just in my journey, like it's been so many just ups and downs and different doors opening, doors closing, and other things. Like, was there a moment for you where things finally like clicked, where you were like, man, like this is my career in real estate, or like, this is what I want to do?
I think so, man. I think there's been 2 points, two of them. One was when I was working in the W-2, and those of you guys that are listening and paying attention, do not go out and quit your W-2 before you buy a bunch of rentals. I would strongly encourage you, keep your W-2 as long as you can to go out and buy a bunch of rentals. So then that way you have passive income before you leave. I'm on that train. And for me, it was, when I got those 16 houses in that, I had 16 rentals at the time. I put 16 single-family houses in a triplex in BFE, Ohio, in contract before I left my W-2 job. And then when I left, like that day, April 12th, 2013, when I left, I was like, this is what I'm meant to do. Like, I guess I'm, and I got up at 6:30 that Monday. I'm like,
yeah,
I could have slept in, it was my first day being an entrepreneur, but I was excited. I'm like, yeah, I guess I'm going to be in real estate now. But like I had manifested that over the last like 3 years.
Yeah.
And I think the other point too, where I just kind of knew, I learned how to wholesale.
Mm-hmm.
Like I came at it completely backwards. I was buying rentals,
yeah,
being broke. And then like most people end up wholesaling. They're like, man,
you're like, I don't have to be broke.
Yeah. I don't have to be broke anymore. And when I'm like, damn, we made like $50K this month wholesaling 2 deals. I'm like, damn, Terry ain't broke no more, guys. Like, like this is awesome.
You're going to have to rent your couch to someone else.
But yeah, balance sheet looks great, but like, lifestyle sucks.
Yeah.
Looking back on it, I'm grateful now.
Right.
But, during the time, like, I guess I didn't know any different, but I think once I learned how to wholesale and I realized, and I started flipping properties too, which didn't happen until 2017, 2018. When that started happening, I was like, damn, dude, like I literally started exercising the equity that I had built up over all these years.
Yeah.
And I started actually enjoying the equity that I had built up.
Yeah. You're like, man, I can have both.
I can have both. Yeah.
Yeah.
We sold a deal today. I'll share numbers. I don't care. We sold a deal today. I bought in 2013. Actually, it was one of the 16 houses that I bought that day. 3787 Pendant Lane in Columbus, Ohio. Bought for like $70K, and we just sold that for $317 today.
Nice.
Good deal. Yeah. And I owed like $80,000 on the deal. So it's like,
yeah,
man, there's 2.25 that I didn't even know I had. Right. And it
Right.
goes in your bank. That's pretty cool. And then when you can do that at any point in time, like you're like, oh, okay, I'm glad I did that now,
Yeah.
So, but for me, it was exercising the equity that I had built up. And that didn't happen until like 2017, 2018.
That's funny.
Man.
So one thing I always tell our students, and this is like kind of what I've realized, is there's always this battle between the long term and the short term, right? And so in the short term, you're like, okay, I got to take care of all my needs. I got to make money and do this, right? And so for us, that might be, hey, let's wholesale, let's flip, let's do this because we got to make money and grow our business. The long term, though, would be kind of what you did, where it's like, hey, I got to buy rentals. I'm focused for the long term. Yeah, I know my short term sucks. I'm going to have to sleep on my buddy's couch and be broke, but long term, it's going to pay off, right? And there's always this inherent battle that's happening between the two, whether you know it or not. Even today, it happens for both of us. And I always say there's a way to kind of have an equilibrium between both. And it's like, yeah, when you're first starting out, sure, you can be short-term focused because you got to figure out how to survive. But at some point, you have to transition to banking some of these rentals and not always just taking that flip money, right? And if you can just build a business model that allows you to do both, like what you discovered in 2018, then you kind of get the best of both worlds where you're flipping, you're wholesaling, you're making money, but you're also keeping some. And like, that's where the real money's at.
That's where it's at, because then you determine how you're going to make money off that deal. And like we have this thing called a profitability matrix where literally we can see the ROI like on our down payments, we can see all this stuff, but on the very front, it's like, here's the intention, but here's the exit strategy. So the intention might have been to rent, but then we're like, man, we got this offer, like, and you know what? You'll run a little bit thin. Let's go ahead and sell this right now.
Right.
Or, hey, we planned on selling this. Let's go ahead and Airbnb this thing. You know,
Right.
we've done that. We're doing that. We did that this week. Property we were going to sell and probably clear like 40 or 50 on. We're like, you know what? We need to, and we've sold off close to 100 rentals in the last 12 months. So we're like, we still have all this overhead, but not as much the top line revenue. So we're trying to scrounge together rentals right now.
Yeah.
Like, well, let's Airbnb this thing, right? But if you can pivot and be an investor and do and have different exit strategies, like,
Yeah.
it just allows you to make money.
100%.
No matter what doesn't matter what the market does. It's like you determine what you want to do and what your company needs are at that point in time.
Yeah.
And you can make
Yeah,
some money.
100%. That's why people, they'll be like, does Future Flipper only teach house flipping? And I'm like, no, we teach real estate investing. Like at the end of the day, and anytime a deal comes through the pipeline, you literally just need to do what is best for that deal and what's best for your company.
Dude, I say that literally. How often do I say that? I say that constantly, dude. I'm like,
Yeah.
what is the best move for your company?
Yep.
What is the best move for that particular investment at that point in time?
Exactly. That's
That's the biggest question. Should I rent this? Should I flip this? Well, what's your company need?
Yeah.
What do you need?
If you're low on cash flow, go wholesaling, get
Yeah.
some money. If you got some taxes you got to pay, keep it as a rental. Like there's no right or wrong way to do real estate. It's all just dependent on you, your market, and kind of what's happening.
And what's best for you at that particular time? Like,
Yeah.
there's no magic formula. It's just what do you need at that particular time?
And this is what we were talking about pre-show. Like for me, flipping was my primary source of income for a very long time. And so pretty much we were always flipping. I was cherry picking a few rentals, and we're in a different market where rentals just don't really make sense like they
It's
do
a little bit different.
Midwest.
A little different.
So, but I've come to the point now where my primary income is not from house flipping. It's from education, from e-commerce, from the fund, from social media and all this stuff. And so now I'm actually wanting to take down these deals as rentals to offset that income and also not gain more income from the flip. And so it's like, oh man, if I could just build my house flipping company into like a funnel of rentals for me to basically offset the other income, that like does the best of both worlds for me. So that's kind of what I'm transitioning to.
Yeah, I love that, man. I probably shouldn't say this on camera, but I barely paid taxes ever.
Yeah,
And that's
exactly.
pretty cool. So I've had to pay taxes the last couple of years, and I'm like, damn, this sucks to stroke this big check, because I started flipping and wholesaling, and the depreciation hasn't really done its magic. But yeah, when you start buying these rentals, and this is the thing I always preach is like, if you don't need the money in your bank account, put it on your balance sheet. Where are you going to get, like, especially right now, Zillow's predicting 13.9% appreciation this year. Okay, where are you going to get 13.9%? Where are you going to get debt pay down? Where are you going to get cash flow and a tax deduction to do all that stuff?
Nowhere.
And the great thing about single families, you're getting appreciation two ways over. You're getting it on the rental, like the same way you would like on the NOI.
Yep.
Like, but also too on the sales comparison approach.
Yep.
So you're getting appreciation two ways over.
Yep.
If you want to sell it off and take these 10 houses and sell them off to a fund, you could do that. Or you could take this one house and sell it to a homeowner because the sales comparison approach is
and that's kind of what we were talking about pre-show for me is like, man, back in the day, I'd look at Vegas and I'm like, dude, these just don't pencil out for cash flow. But 2 years later, they would have. Like the rents finally caught up and they would have cash flowed great. They appreciated like crazy.
Yeah.
And so now I'm seeing that and I'm like, do I anticipate things are going to keep appreciating in both ways like you mentioned? Yes. Okay, so if it breaks even today, should I buy it? And in my case, I should because I'm not worried about cash flow and like, that it's not going to cripple me if it's negative or if I don't have a tenant paying. Like I have enough income from everything else. So I have the long enough time horizon to say, yeah, I'll buy it today knowing that in 5 years, I'm going to cash flow like crazy. It's going to be worth more. I'm going to get all the tax benefits. I'll get cash flow if you just include like my tax benefits.
Yeah, for sure. And the thing I always say too is like, if you're buying a rental property, you always have the option to sell whenever you want. Like if someone offered you, let's just take a house in this market, right? $500K or whatever, normal house is. Like
think it's
you're
like
offering-
450 now.
All right, so if it's 450 today, okay, what's it going to be next year? You know, if you just hang on, right? Do you think you're going to get 450 next year if you need to sell?
Yeah.
So there was my original mentor. He said this, and this is something that's always stuck with me. Is in the rental business, the worst thing that happens is you sell.
Yeah.
That's the worst thing that happens. Whereas like a flipper or wholesaler, you have to sell.
Right.
But if you're in the rental game, like, dude, that's the worst thing that happens is you sell.
Right.
So I guess I've always just taken that approach. Like I can sell whenever I want.
Yeah. No, 100%. And now you're reaping the rewards.
Yeah. But it takes a long time.
Yeah.
It takes a long time.
Real estate's a long-term play. But, I mean, look, for everyone listening, everything takes a long time. You know, like whether you're buying rentals and just waiting for that big payday, whether you're investing into a fund, you know, I preach this on our e-commerce stuff. I'm like, guys, like the store's not making money for like, you got to wait, you know?
People don't want to wait though.
No, nobody wants to wait. And even like if, you know, they're brand new house of them, like, look, you might get a deal your first month. You might not. Like, do the odds say you're going to get a deal your first month? No. Like, but it's happened.
Yeah.
And in the long run, if you stick with the process of, you know, learning real estate investing, you will win.
Yep.
Real estate takes time.
It does take time, man, but it's tried and true, right? Whereas like everything else, like crypto, you know, I'm heavily invested in crypto.
Yeah.
Heavily invested in some other things. But these are home runs, right? This stuff that's unproven. But if you look at the oldest professions on planet Earth, it's like prostitution and landlording. Those are the two oldest professions. And, you know, I'm not going to be good at the one. I'm married, can't do that. But landlording, dude, I mean, people have been making money since biblical times,
Yeah.
renting out a shelter.
Right.
You know, and, you know, I look at like the world today, like, I don't know what you think about like everything going on, war, you know, rates, market inflation, all that stuff. But, dude, what are people going to need? They're going to need energy. They're going to need food, water, and shelter.
We've always needed those things.
And we're going to always need those things. Like, we can't go live in the metaverse yet.
Yeah.
That hasn't happened. So it's like we can't like chop our bodies up and go transplant to the metaverse or anything like that. But, you know, so we're always going to need real estate and we can't build it.
Right.
You know, so naturally it's going to go up.
Yeah. No, I 100% agree. And I think that governments can't control themselves. They're going to keep printing money and it's going to keep flowing into assets.
What
like
do you
real
think is
estate.
going to happen?
With what?
Inflation, market, like no one's got a crystal ball, but I'm just always curious to see what like other people think. And I base my opinions and you know, my forecast on what
Yeah.
you know, other people think.
I mean, I've said it for a long time. In 2022, things are just going to keep skyrocketing. I don't expect any kind of slowdown. I actually made this prediction at the start of the year. I said, hey, I believe that rates will increase in like March or April, just like whatever, a fraction. Then there's going to be negativity from all of that. And then I think they're going to come up with some excuse to lower rates again and print more money. That was my prediction. And I said, I think by the end of the year, rates will actually be lower than where they were at the start. And I just still think that's happening. And like it's kind of playing out to a T of like, yeah, we're going to raise rates and, you know, we're going to combat inflation. And then all of a sudden there's this war out of nowhere and there's going to be something that happens that causes us to be like, oh, well, we got to support the war and we got to do this. And
Yeah.
I don't know. I think you could play the tape a year later and see if what I said plays out, how it plays out. Because I predicted 2021 pretty accurately as well. And I actually had Grant Cardone on the podcast, and his prediction was he actually bet all the viewers. I think we filmed in November. He said, I'll bet every viewer here who comments that if rates are higher than they are today a year from now, like I'll give you guys all something. I forgot what he said. But he's that confident that rates will keep decreasing. And when you got guys like Cardone who are buying $1 billion of real estate,
It's insane.
like betting what, like, you don't think he's kind of got some stuff in the know?
Yeah.
You know, he's talking to people
Right.
who know way more than me.
Yeah, for sure. Yeah, man. I like we started selling off a bunch of stuff. I mean, we got to a point to where like, you know, I was had a couple multifamily deals, sold those off. It just made sense. It was time.
Right.
You know, we had one multifamily deal, it was a 72 unit, and we were spitting in out of our portfolio mix. This was like 1/6 of our portfolio, and it was like half of our headaches.
Right.
So it was like income to headache ratio. Dude, this thing doesn't make sense. Let's get rid of it. And then we cashed that out. But So we've been selling some stuff off, and people are like, why are you selling? Why are you selling? I'm like, well, we're kind of taking some chips off the table, but at the same time, we're buying a shit ton of rentals still. Because I do believe that. I do believe that rates are probably going to end up exactly where they were at the beginning of the year. Wall Street's buying properties. Vegas is the worst. Vegas is the worst.
Yeah.
Hedge funds.
They love buying here. Look, if Wall Street's buying, all these guys are buying, and you follow the big money, man.
Yeah.
You don't follow YouTube or CNN or Fox. You just follow the money. It's like everyone's buying, and they are buying heavily.
And look at the best, I wouldn't say the best, but the wholesalers that are making the most amount of money in real estate right now are in these markets. So they're in Vegas, they're in Phoenix, they're in Orlando.
I've sold to the hedge funds many times. They pay me crazy money, and I'm like, I originally, as a naive investor, I thought, you guys are dumb. Now, having been through 12 years and seeing the hedge funds buy back in 2010 and thinking they were dumb, seeing them buy in 2012, thinking they were dumb, seeing them buy now, I'm like, yeah, I think they're right. And they just are playing a different game that I can't really compete with because their time horizon and their cost of capital is just so much different.
It's so different, man. And you look at where multifamily, originally multifamily back in the 50s and 60s, it was all privately owned, and then Wall Street came in like the 60s and 70s, like, hey, we can buy this stuff and make money, and we get a tax write-off and all this stuff. And that took a longer time, right? It was different. But now with internet technology, you don't even have to have a leasing agent anymore. You can do self-showings.
Yeah.
Like your operational costs have went down tremendously, right? So they've realized that, hey, we can scale this single family thing. Let's get into this, right? And they're just doing it so much more quickly than they did back in the day in multifamily.
Yeah, and that's the thing, right? Like after the Great Recession, that was the first time they ever looked at single family as an asset class to own at scale. And I remember Blackstone bought up like all the Vegas homes. They recently just sold like their entire portfolio of crap they bought. And they'd made...
Who'd they sell it to?
Who knows? But the dude, they made billions. It's like, man, those guys they're pretty smart.
Yeah, exactly, man. Follow the money, man. Those of you guys that are listening and paying attention, just follow the money. Yeah. And wherever the big money's going, if there's an influx of capital in that area, you need to be there.
Right.
That's Cardone. That's why he moved to Miami, went to Miami. Like, there's a lot of capital down there. He's investing down there. Fort Lauderdale, right?
Yeah.
Buying massive buildings down there that, might not make sense to us as, or viewers. Like, how are you buying it? Well, he's following the money.
Yeah.
Not stupid. He's really smart, man.
Yeah, and it's funny because, I've got my own fund and we're buying deals, and it's pretty crazy. Like, just buying deals recently, already getting offers from these hedge funds at significantly more than what we paid, like multi-million-dollar exits had we wanted to just flip them right now. And I'm like, what the heck is going on here? Like, we haven't even fixed it up yet. Yeah. Like, we haven't done like what we're going to do yet, and then exit. And they're like already like, we want it now.
Yeah. You know what I think is unique here, though, too, is like you guys got an average price point of, say, $450, and let's say it's a 3-bed, 1-bath ranch or a 2-bath ranch or whatever you guys have here. I know at least in Phoenix, we stayed in Airbnb last night. It was a 3-bed, 2-bath ranch. I think the person paid $650 for it.
Yeah.
But the cost to rehab that stuff is the same in Columbus, Ohio, that it is in Phoenix.
Yeah.
Only our price points are way lower.
Right.
Right. That same house in Columbus is $250.
Right.
But the rehab cost is the same. Follow the money.
Yeah.
Like, you have way bigger margins here because you have way bigger price points.
100%. And it's interesting because, I'm going on my, 8th year of flipping. And I remember when I first started in 2015, my goal was like, if I can make $20K a flip, like that's great. And I did that.
I remember those days.
Yeah, and so $20K, and that was our average for years, right around there. It was like $20K is great. And then last year was our biggest year ever, and our average was $55K a flip. And I was like, how the heck did this happen? And obviously I'm like, did we just get that much better? I'm like, no. Like, what happened is obviously a ton of appreciation, right? Like, every house we bought ended up getting way more than we anticipated. But also what's happening is a house that, like, the average house we buy is $450 now instead of being $200.
Bigger numbers, bigger paychecks.
Yeah, so it's like if we're still running deals the same way where we got to make 10%, then, yeah, it makes sense why we should make $50K a house because the prices are just that much more.
Exactly, man. Exactly. And who knows, like, when appreciation is going to stop, and you never want to bank on it. But part of the reason I put down roots in Columbus is, like, the market, like, dude, I mean, the appreciation that we're getting there.
Yeah.
It's like we're not even in the conversation yet. Like, we only have a couple hedge funds that are there that are buying. And then you look at, like, Nashville, even if we're, like, 2 or 3 years behind, say, like, Charlotte or Raleigh-Durham, like,
Right.
we're sitting in a pretty good spot right now.
100%. Well, dude, I think it's cool what you're doing. I think everything you're teaching is really great. We share a lot of the same philosophies and ideologies. So for those of you listening, I think just understand that there's multiple ways to get to the same destination. He took a different path than I took. And, but in the end, it's just like if you get good at finding deals and fixing up properties, you can pretty much do whatever you want.
You can. Just as long as you know how to find discounted properties, you will always make money. Yeah. That's the number one skill set, finding deals and raising money.
That's it.
It's number two best skills of an entrepreneur, right?
That's it.
Deals and money.
That's it.
You do those two things, you'll be successful no matter what it is.
Yep. So, well, Terry, dude, I appreciate you coming to Vegas.
Yeah, Ryan,
man.
I appreciate it, man. Absolutely, man. Thanks for having me on.
Yeah, bro. So, guys, make sure you go follow Terry. We'll link to his socials down below. And make sure you're subscribed, and we'll catch you on the next one. Peace. Thanks for watching The Ryan Pineda Show. If you want to work with me, head over to ryanpineda.com. You can find my courses, coaching programs, and upcoming events. We also have free resources you can download, so head over to ryanpineda.com.